But it's not just gold and silver mining stocks that I expect to be in a huge bull market. I also think you're going to see bull markets in international value and dividend-paying stocks. And so the manufacturing sector is as weak right now as it was in the worst part of the COVID pandemic. What does that tell you about the health of the economy and where the economy is likely headed in 2023? But I want to move on and talk about the market's reaction to what was heralded as a much stronger than expected jobs report. In particular, the reaction in the foreign exchange and the precious metals market. Because in the immediate aftermath of the release of that stronger than expected number, exactly what you would expect to happen happened based on what has been happening in the recent past, in that the dollar immediately rallied and gold immediately sold off. In fact, gold was down $20 and the dollar, which had come in weaker on the day, rallied across the board. Again, this is the way the traders have been trained and the algorithms have been programmed to react to what is seen as stronger economic data based on the impact that it has on Fed policy. But as I pointed out in my last podcast that I recorded on Wednesday, after I observed the way the markets reacted to Powell's very hawkish speech about inflation and how committed the Fed was to bringing it down, and how there was no evidence whatsoever that there was any headway being made in the fight against inflation. And so the Fed was going to have to raise rates higher and keep them higher longer. I thought these were fighting words from the Fed, and the markets just didn't buy what Powell was selling because we had a fall in the dollar and a rise in the price of gold in the face of that speech. And I said, to me, that was convincing evidence that the markets had changed, and it didn't really matter now what Powell said, because investors know that he's all bark and no bite. And in fact, we had some real follow-through on Thursday. Gold prices shot up again, better than $20. In fact, we closed Thursday above $1,800 in the price of gold, and silver was even stronger, and the U.S. dollar continued to fall. In fact, on Thursday, we closed below 105 on the U.S. dollar index, and I have been talking about 105 as a key level for the U.S. dollar from a technical perspective. Now, after we got the jobs number, we saw gold giving back a good chunk of those gains and the dollar recovering some of those losses, but then the markets reversed and the dollar sold off and the dollar index closed negative on the day, and gold recovered almost all of its losses. It still managed to close down a couple of bucks just below 1,800, but silver actually finished the day positive. Now, the reversal also happened in the stock market. Dow Jones futures sold off to about negative 500 as soon as the jobs numbers came out. But by the end of trading, the Dow closed positive and the NASDAQ paired its losses, turning what started out to be a large decline into a very small loss. And again, this is further confirming my suspicions that due to this new perception that the markets have of the weakness in the economy and the likelihood that the Fed won't be able to deliver as much in the way of tightening as Powell is now projecting, I think we're going to get a rally between now and the end of the year in the stock market, the so-called Santa Claus rally, but it is a sucker's rally that will not last and should be sold. In contrast, what's going on in the gold market and in the gold stocks, this is not a sucker's rally. This is a new bull market that nobody is talking about, and it's going to coincide with a new bear market in the U.S. dollar, because with the fall on Friday, the dollar index not only closed the day below 105, it closed the week below 105. It closed Friday at 104 down another 20 basis points on the day, despite what was seen as stronger than expected jobs numbers. I think the next key level for the dollar index is 102. And if we close below that in the next week, I think there's a good chance that the dollar index could sink below 96 before the end of the year, which would mean the dollar would actually finish 2022 negative, even after being up close to 20% at its highs. By the way, as of right now, the dollar index has lost 9% from its high. And if you look at the Swiss franc in particular, the Swiss franc is now only down about 2% on the year versus the dollar. And I'm very confident that by the end of the year, even if the dollar index finishes up, the dollar will end the year down against the Swiss franc. So it's the Swiss franc, not the US dollar, that will prove to be the safe haven currency. But the ultimate safe haven from all currencies is gold. In fact, looking at the weekly gains, the price of gold rose about 2.5% on the week. Silver up about 8%. The GDX was up 5.2%, and the GDXJ was up 5.6%. But taking a broader look at what's going on here with the precious metals and the mining stocks, gold is now 11% above its lows, and it's now only down 2.2% on the year. Silver has had an even bigger comeback. It's now 32% above its low for the year. Silver is in a huge bull market, and nobody is talking about it. In fact, silver is now down just 1% on the year. And in fact, I am now confident that both gold and silver are going to finish 2022 with gains. In fact, many of the people in the crypto space were pointing to gold's failure to rally in 2022. In fact, gold's losses in the face of surging inflation as proof that gold was no longer relevant and that it had been replaced by Bitcoin. Bitcoin is down 63% so far in 2022, and the Grayscale Bitcoin Trust is down 74%. So if gold's 2% fall means gold's irrelevant, what does Bitcoin's 63% fall mean? Clearly, gold is every bit as relevant as it's always been. It's just that not a lot of people appreciate that relevance, but they will. And in fact, gold could have such a strong finish to 2022 that it may end up beating the official rate of inflation. Whether it ends up beating the actual rate of inflation, I don't know that it can make that big a move in the remaining days of 2022, but I'm sure it will make up that lost ground in 2023, because I am expecting an explosive year for both gold and silver in 2023. In fact, look at what's already happening with the mining stocks. The GDX is now 39% above its 2022 low. That is a huge move, and it's now only down 6.6% on the year. Gold stocks are now stronger than any of the other major indexes. The GDX is no longer even in a bear market, only being down 6.6% on the year. In fact, it's clearly in a bull market, being up 39% from its lows. And in fact, the juniors have made an even bigger move. The GDXJ is now 44% above its 2022 low. Now, it's still down 11.2% on the year, but that would only put it in correction territory on the decline. But clearly, what's more significant is the 44% move from the low, which clearly puts the index in a bull market.